Hi traders, welcome to this 𝖢𝖥𝖣yi Academy video, intermediate part 3. This time we're going to be discussing the multiple time frame analysis, Heikin Ashi candles and harmonic patterns. At its core, multiple time frame analysis is a technique used by traders to get a more comprehensive view of the market. Instead of examining a single time frame, traders analyze several time frames of the same currency pair to make a more informed trading decision. By examining several time frames concurrently, traders can understand both short-term price movements and the overarching trend. For instance, while a weekly chart might show an uptrend, a 4-hour and 1-hour chart can help identify short-term pullbacks or consolidations within that trend. By zooming into shorter time frames, traders can pinpoint more accurate entry and exit points. A trader might spot a buying opportunity on the daily chart, but by examining the hourly chart, they can fine-tune their entry and get a better price. Indicators can also help identify higher time frame opportunities. Applying a 50 EMA and a 200 EMA helps traders stay with the higher time frame trend on a lower time frame. In this example, we can see that on the left hand side we have the Australian dollar weekly time frame. On the right hand side we have the same pair but on the H4 time frame. The red vertical line shows when the weekly chart was bearish, and we can see on the H4 chart that the price began to create a downward trend. This could offer traders trading opportunities on the lower highs. To help aid us visually, we applied the 50 and 200 EMAs onto the H4 chart. The 50 EMA, the red line, is below the 200 EMA, which is the white line, and we can see that price remained bearish. So what are Heikin Ashi candles? Heikin Ashi, which translates to average bar in Japanese, offers a unique twist on these traditional candlesticks. They are an offshoot of standard candlesticks and are designed to represent price movements in a smoother manner, making it easier for traders to recognize trends and forecast future price movements. The Heikin Ashi candles are calculated using a combination of the open, close, high and low prices from the current and previous periods. Heikin Ashi makes it easier to spot trends. A sequence of consecutive green or blue candles indicates an uptrend, while red or black candles signal a downtrend. The longer the candles and the absence of the lower wicks, the stronger the uptrend. Conversely, longer candles with no upper wicks suggest a potential downtrend. When you observe smaller candles with the wicks on both sides, it's an indication that the market is consolidating or in a range-bound state. Since Heikin Ashi charts provide averaged data, they tend to filter out the noise of minor price fluctuations, delivering a cleaner view of the market's movement. Harmonic patterns are complex geometric structures that are formed in the price chart of a Forex pair deriving from the discovery by 𝖢𝖥𝖣yiin 1932. These patterns take advantage of the neutral rhythms of the market and are based on specific Fibonacci retracement and extension levels. They aim to predict future price movements. This is the oldest recognized harmonic pattern and is often referred to as the 𝖢𝖥𝖣yi 222 because it's found on page 222 of 𝖢𝖥𝖣yi's book. The 𝖢𝖥𝖣yi pattern can be bullish or bearish, and the idea behind the harmonic patterns is that certain price movements tend to repeat themselves. Using Fibonacci numbers, traders find potential reversal points in the market, making it possible to identify great buying or selling opportunities. When a harmonic pattern is identified, traders typically look for a confirmation signal, such as a candlestick pattern or a break in a trend line before entering a trade. Stop loss levels are usually set just outside the harmonic pattern to limit potential losses in the pattern fails. So to summarize, we've learned about multiple time frame analysis, how a weekly chart can help you trade a H4 chart. We've learned about what is a Heikin Ashi candle, and we've also learned about harmonic patterns. Thank you for joining me for this 𝖢𝖥𝖣yiI Academy Intermediate Part 3, and I'll speak to you in the next one.